In this world, there are two things that you simply can't avoid. Number one is death. Number two, taxes. Now, we all hate taxes, right? And pretty much everything we do in life has some sort of tax involved with it. Whether that's getting paid from your boss, driving your car on a day-to-day basis, receiving money from a family member, or in most people's cases watching this video, cashing out your money you made from investing into the stock market. However, one thing we also have to remember is that tax also gives us a lot of benefits too. They of course help us pay for our national health service, our ever-improving education system, and many, many more great things. But you've probably worked out that we're not here for that one today. What I am doing today is making a video to share with you some of the legal ways that you can actually avoid tax that you are not obliged to pay so that you can enjoy more of your hard-earned money, and we're getting into that right now. What's up guys, Christos here and welcome back for another video. On this channel I make videos about personal finance and investing into the stock market, so if that is something that interests you then consider subscribing. Alright, so let's kick this video off with actually a quick disclaimer, because of course this is a very sensitive subject. I am for one not a qualified tax advisor, and none of my content on this channel should be taken as financial advice. I am somebody just simply sharing my past experiences and the things that I have taken advantage of, which the government has actually made readily available to me and others throughout my journey of investing and business. Alright, so I guess the first thing to do is actually understand the difference between tax avoidance and tax evasion. Tax avoidance is the use of legal methods to reduce the amount of income tax that an individual or business owes. Tax evasion, however, is an illegal activity in which a person or entity deliberately avoids paying true tax liability by underreporting figures and some other shady tactics. And the main difference between the two, apart from of course up to 7 years in prison, is that tax avoidance is completely legal and tax evasion is illegal in every way, shape or form. So let's now jump into some ways that you can legally avoid tax in the UK to make your money go further in the long run. And let's start off with number one, and that is through an ISA. In the UK, at the time of recording this video, you can actually invest or save up to £20,000 every single tax year across different types of ISAs, and basically the interest earned or the capital gains earned within these accounts will actually be completely tax-free. And there are actually many different types of ISAs that you can set up. You first have a stocks and shares ISA. This is basically where you can invest into individual companies and index funds to receive dividends without having to pay any tax on your gains at any time. You also then have a lifetime ISA where you can put up to £4,000 every single year into your lifetime ISA, and the government will actually reward you with up to a £1,000 bonus every single year. The only catch with this one, however, is that you have to wait until you buy your first house or you reach the age of 60 to be able to withdraw the money with the added bonuses. And then finally you have a cash ISA, which is aimed at those not willing to risk their capital into investments that also wants quick access to their money while still receiving the tax-free benefits that the government provides. ISAs as a whole are a fantastic way to save money and invest money tax-free, and I always set my goal every single year to max out my ISA accounts to take full advantage. One thing to also mention about ISAs is that whilst at the time of recording this video the limit is set to £20,000 every single year, and I can only see this number increasing in the future. The reason why I say that is because I actually remember when I opened my first ever ISA around 9 years ago, and the limit was actually only at £12,000, so it's good to see it increase consistently throughout the years. The second way that you can avoid tax in the UK is through capital gains and dividend tax allowances. Now, when you invest into something, of course your main goal is to potentially sell it on in the future for a profit. This in most cases would be classed as making capital gains on that item. And basically capital gains tax is the tax on the profit when you sell or dispose of something as an asset that has increased in value. One thing to also note, it's the gain that you make when that item is taxed, not the amount of money that you actually receive. For example, let's say you bought a painting for £5,000 and then sold it later on for £25,000. This means that the capital gains you made on that painting would be £20,000, and that's what you would be liable to pay tax for. When it comes to capital gains allowances, if you have maxed out your ISA, you still have a further £12,300 that you can earn up to in capital gains before you are obliged to pay any tax on it. You also have have something called a dividend tax allowance. So basically, if you invest into a company or maybe you own a company, you can actually pay yourself or receive up to £2,000 every single year in tax-free dividend allowances. Both of these allowances are really important to understand when investing into any kind of asset or business, because you could potentially be paying tax that you don't actually have to be paying in the first place. Now, the third way that you can legally avoid paying tax in the UK is through business expenses. Now, if you run a business or you are self-employed, depending on the nature of your business, you can actually purchase certain items and assets that can be counted as an expense, which will then reduce your overall tax bill. For example, one of my businesses is this YouTube channel, and basically what I did was I purchased this £600 camera that I'm filming this video on and my £2,000 work laptop to edit the videos, and these were both counted as a business expense. If I didn't count these both as an expense, this would be an additional £2,600 in profit that I would be taxable for, and if we take the base figure of 20% in tax, that's an additional £520 I would have had to have paid to the government. My only suggestion when it comes to things like this is to be very careful on the expenses that you do claim against your business. For example, if you were a plumber, let's say, I'm not sure a new TV would fit into a business expense, and it would be very tricky explaining that one to the taxman if he comes knocking on your door. But all in all, running a business is a great way to take advantage of some of the great tax benefits that the government has actually provided to us and made available to us, and everybody that has a business or anybody that is paying tax on their own behalf should be taking as much advantage of this as possible. So there you go, guys, 3 really good and completely legal ways that you can avoid tax and keep your yearly tax bill at an absolute minimum. And like I did mention at the start of this video, none of this is actual financial or tax advice. This is simply me just sharing my own personal experiences. But if you did find this video valuable, I would highly appreciate it if you dropped it a like down below and subscribe to the channel if you haven't already. Other than that, I shall catch you guys in the next one.